What's up, guys? Riz here, back at it with another video, giving you a little bit of a recap of the market situation. And this is a follow up to my previous video over the weekend where I kind of gave these levels. You could see the critical levels here that I've already had on the chart before. And wow, they're pretty amazing to see how the markets moved within these key points that I've already drawn beforehand. So just a quick recap, this is the S&P 500 index. This is what we look at for the market as a whole. And in the green and red, you'll see the moving averages respectively, the 50-day moving average in the green, and of course, in the red, you have the 200-day moving average. You can see the market has been extremely volatile, especially to the downside. And boy, today, Monday, January 24th, was a wild day. If you were trading today or watching the markets in real time throughout the day, you would know that this candle here that we're looking at is just absolutely absurd. We had a massive sell-off today. The market was down roughly, I think, nearly 2% at one point from this level here. What was it? No, that's not can't be right. Yeah, it was literally down just about a significant portion there, about 4% from this level, and it went as low as 42, 40 area, 42.24 area, and man, it was just wild, and it went as low as that, and then in the last hour or so, we just had a massive pickup, massive buy the dip situation, and you can see the candle close green. The market closed above the open, and that's why this candle is green. And we're now back at the 4410 area, 4400 critical zone that I already marked before. And right now, this just based on today's candle is looking bullish, but we have to be careful because we've had a week's worth of sell off. We've had a lot of negative and bearish sentiment. We've seen a lot of people, panic sell, which is what you're seeing. We've seen institutions cut their risk, cut their positions. We've seen many retail traders and investors who had been using leverage, who had been using margin, get margin called. And these are the kind of situations we see that's very reminiscent of, like I said in my last video, of March 2020. Now, again, this is not that case. This is not that specific situation. And people will also ask, of course, Riz, was this like 2008? Right now, we're not getting any indication that this is like 2008 or prior, 2001. So it's important to sort of center ourselves and not get too carried away and thinking that, okay, maybe this is like, another crash like March 2020, or maybe this is a crash like 2008. 2008's crash was a slow meltdown, right? It was a slower drop. Didn't just happen all at once. In fact, what's happened, the last week and a half or so, with the market sell off, this is the fastest January sell off, the fastest sell off in the start of the year in any year before. So you can notice the trend that every time something happens in markets, sure, there's some historical precedent, there's some similarities, but it's never one to one. It's never an exact copy. It's never exactly the same, right? You know the saying, history doesn't repeat itself, but it does rhyme. So we are seeing some similarities, but it's important to draw caution to the wind. Don't go too one way or the other. Don't think that, oh yeah, this is going to completely come back and we're going to hit all-time highs in the next week or two, but also don't go so far as to think that, you know what, oh my god, we're going to see another, 20-30% drop from here. I don't think that is on the cards based on the situation now. Remember, I can't tell the future, no one can, as much as they might pretend they can, but no one can. So based on where we are right now, let's take stock of where we are. The market actually was down in correction territory, approximately roughly 10.5% down. So that's correction territory. Obviously, throughout the day and to the close, it recovered. And right now, we're probably down just about 8-9%. Yeah, about 8.5% almost from the highs, right? So recover from that correction area. Am I going out and just buying everything in the left, right, and center? No. What I am going to caution you to do is, let me get this tool here. So I'm going to draw a couple of notes here for you, um, in terms of what you should do, what you should consider. Again, none of this is um, trading advice, so to speak. Oh, one, you want to consider perhaps taking starter positions in some of these great companies. Again, I'm not going to list them off. There's far too many. You have to do your own due diligence and decide what works for you. And you might want to consider starter positions. What's the starter position? Think of it like 1/4 or 1/4 of your normal size position, right? So I'm hoping you have these kinds of things set up. You know what you're doing, and that you know what a starter position is for you in terms of percentage of your account, right? You also want to make sure that you have some cash and funds in reserve, because if markets go lower, you can scale in, right? So scale in terms of if the market drops another 2% from here and we go to maybe the 40 to 50 area in the S&P 500, you can then consider scaling into some of the positions either that you've already taken starter positions in, or buying other solid great companies that you like. And I'll leave that to you, but that's definitely something you want to have a plan for. And last but not least, if the markets go further lower, remember, we cannot ever consistently buy the dip completely the bottom. We'll never be able to get in the bottom exact. No one can do it. Doesn't matter if it's Warren Buffett, so on and so forth. No one can consistently time the market to the extent they can get it right at the bottom and then do it again and again. The consistency is just not possible. So what do? We essentially hedge ourselves. We, scale in. We have proper risk management. We have a plan. These are the ways you want to look at markets. If markets go lower, another 2%, what do you want to do? You want to add a little bit more. If they drop another 2% from there, so let's say we're down 4% from current levels, you want to have a plan. So I always say every 2% to 3% that the market drops, right? You want to consider scaling in further. All right. This isn't a hard and fast set kind of rule written in stone, but it's something that you definitely want to uh, have a plan for. And does this mean, oh, once you do this, once you start putting this plan into action, once you start doing these three things, that the market's going to recover and you're automatically going to be able to make massive amounts of money quickly? No, there's no guarantee of that. But this is one of the best kind of plans, sort of trading plans on how to react and how to implement capital in this market. And I'm confident that this will serve you well. But please make sure you're going based on your risk tolerance. You have a plan. You know what your account size is like. You know what your risk is. You know the positions you want to get in, and it requires obviously some sort of work on your part and some sort of due diligence on your part. But as a key kind of simplistic blueprint, this is the one that you might want to consider, because you're never going to be able to just pick the bottom and then put all your capital in. So what I've been doing is similar to this. I've been adding a few positions today, and I'm looking to do the same this week, depending on how markets go. I can't tell the future. No one can. So although this looks very bullish, today's price action, I'm waiting to see if the market can hold above the 4,400 level. We do know that this is very near the 200-day moving average as well, which is obviously can act as a nice key support. So if the markets can hold, that is fantastic. Keep in mind, I am posting this today, Monday, January 24th, but we do have a Fed meeting January 26th. So what the Federal Reserve says, what Fed Chair Jerome Powell says, will of course play into market price action, will play into how the markets absorb what is said and then react, right? So keep in mind, if you haven't seen the previous video, please watch that first. I should have said that before. It's important to watch that previous video because this is a follow-up to that. I hope you enjoy these insights. Please, if you haven't already, like, follow, subscribe, whatever. Follow us on social media. Give us a try. I've also opened up the Elite membership for a few hours, so depending on when you're watching this, you might have the opportunity to join us in Elite just for $2 to try us out, and it's no hassle. no nonsense, because you're gonna get real time updates for what I'm doing, and of course a lot more than that. So again, thanks for watching. Hopefully this is a good little a plan for you to kind of follow. Please do not panic. If you stick with it, if you use proper risk management, you have a plan, you put that plan in motion and you act on it, and you hold solid companies, you have a rough idea what you're doing, you're not completely new, and you're not completely just winging it, you will be fine. You will do great. In fact, I've said it before, some of the most amount of money I've made in markets is during times like these, where the average person is bleeding, where people are panicking, where people who don't know what they're doing are getting margin called, and there's blood in the streets, so to speak. That's where I come into my own, and that's where a lot of the money is made. And if you've been, following along with me, you've been on this journey with me, you've been paying attention, you know that 2020, which was when the market crashed like 30% in a span of 2 to 3 weeks, that year I made some of the most money in the markets ever. So that's contrary to what most people think, that, oh my God, the markets have to go up, up, up to make money. Not necessarily. If you know what you're doing, you have the right guidance, like the people in elite membership do, you know what? You can do extremely well during times like these. So keep it locked. Please follow, subscribe. Thank you so much for your support, and catch you in the next video.